expected, and State Bank of India is something that we're tracking at the start today. Large public sector bank, of course, we've seen a few earnings in the banking space. You will know about the advances and deposits growth. But let me go across to Harsh about the key elements to watch out for, not least of which I would assume is the asset quality. Harsh, what's the view here?
Well, seems like State Bank of India will be able to maintain those asset quality numbers. Doesn't seem to be something which will alarm the street likely, because State Bank of India has a very large book otherwise outside of the pockets where we have seen stress. But let's talk about the overall picture. One is, of course, asset quality going to hold key in terms of what they're seeing on ground, what component of their portfolio is MFI, how much exposure is there, and how that portfolio is behaving. That will of course be crucial. Outside of that, margins. How much of margin contraction? Well, the likelihood is that they'll be able to maintain the 3.2% kind of margin number which they clocked in Q1, likely to continue as is, and therefore a muted growth on the NII count. In terms of operating profit, you're expecting a slight bit of decline QOQ, but on PAT, you're expecting just about a flattish kind of a profit after tax number on a sequential basis. On a year-on-year basis, you'll continue to see a decentish healthy growth. In terms of advances as well as deposits, that's going to hold the key, because can they continue to grow on the base that they are growing in terms of deposits in this environment? That's likely something that the street will look out for. Also, their capital adequacy. Will they require a capital raise or not is something which we'll wait to hear from the management, because it's one of those few banks where capital adequacy has shrunk and likely an equity raise on the anvil.